What is going on, guys? Good evening. It's your favorite mortgage lender, Del Kwame, got mortgages. I hope everybody had a blessed weekend. We finally got some nice weather because, man, oh man, have we been getting some crazy, crazy rain, practically a tsunami the other day, earlier last week. But thank God that's done. Interest rates are significantly kind of shifting focus from where we ended the week. We saw a little bit of changes, not too much data that came out earlier this week, but we're going to dive heavily into a lot of the different things. The first things we consistently saw was once again home price gains on a consistent downward, upward trend, I should say. Still seeing an upward trend with nationwide 0.3% in June, 0.6% in May, showing that consistent home appreciation. Again, highlighting the importance of purchasing real estate and the values in terms of it appreciating. Still jumping up, where we've seen basically almost a 50% home value appreciation from where they were sometime, within the last, I believe, 4 or 5 years. KSChill and the FHFA both showed once again that that investment is still there. Now we're still seeing again the media trying to spin things in regards to rising home inventory. We will always consistently see during these summer times inventory continue to go up. So once again, we saw in July they went up, or I should say in June they went up 5.3%. We're now up 37% compared to last year. Again, what does this mean? This means that with interest rates dropping, we're going to consistently see a little bit more inventory. It is what I say to my clients, that double-edged sword. As inventory starts to increase, that generally means that interest rates to an extent should simultaneously be decreasing, creating that additional room and really competition thereafter. In the Northeast specifically, we are down 65 to 75% in terms of inventory relative to where we were over the last 5 years. Aside from these particular states with Texas, Idaho, Florida, and Tennessee, all the other states predominantly are obviously on a significant downward trend. Seasonal inventory, as I had mentioned, usually during the summertime, we will see that uptick when it comes to inventory. And then we talk about unemployment. Unemployment, once again, showing still signs of remaining elevating. Remember, I know I sound like a broken record. The two things that we are monitoring is employment and inflation. Now, employment, we saw a still a stickiness when we talk about the employment data market. When we start seeing initial jobless claims still being a little bit high, continuing jobless claims at over 1.875 million people having a hard time finding a job after they have been formally let go, something that is important for us to keep in mind. We're once again seeing again that continuing trend, which once again we'll see this week. We're going to get inflation data. So just this time last month, when we were talking about the inflation data and it came in very, very significant, we saw interest rates start to trickle down significantly. We also simultaneously started seeing that rates went from as high as just topping 7% to as low as almost 6.5, 6.25. Some of our clients were able to catch doing refinances on their FHA loans in the fives, actually 5.75. We locked a few clients at doing our rate and term refinances, some of the clients that we had closed. So a lot of different opportunities for many consumers who purchased a home within the last 2 years to obviously strategically go back and refinance. Other main opportunities that we're going to start seeing is more inventory. Okay, so tomorrow we're going to get the PPI report, producer price index. That's going to give us a little bit more insight, just an idea in regards to what we're working with when we're talking about inflation. And then we're going to be getting on Wednesday the big one, the CPI report, consumer price index. How are consumers themselves spending their money? Is it still remaining elevated in terms of where they're at? Are we still consistently seeing that relative data that comes out showing that inventory is still remaining high? We're starting to see interest rates start to drop. Could that be the real trending data that we want to see in order for us to see those trends of mortgage rates start to go down, right? But if we go here, as I always share with you guys, just some information in regards to Mortgage News Daily. We will pull that up. On that, once again, we will see again not as much movement in the bond market today. Really, kind of teetering, waiting to see where the market transpires with the inflation data report. But I will kind of go back and show us January 1st, 2024. Check that out. We're literally seeing essentially a pretty uptake. Then obviously around this time is where we saw a little bit of transition. And then we've been on that downward trend. We saw that big drop really around August. Big drop. And now we've kind of really reversed that course and kind of went back up. Okay. So interesting to see again a lot of greens previously, where red means that rates are going up. We reversed a little bit of a course just this time. I believe it was on Friday. So we'll start seeing this. Will inflation kind of come in and show us that these are what exactly what we're looking for? Are we going to see consistent data once again showing the consumer spending money and wholesale inflation continuously going down? Okay. As always, I'll keep you guys updated. Again, if you're a consumer out there who's looking to get pre-approved, you should 100% be updating that pre-approval letter, getting in touch with that preferred partner. It's about right now 7:30. We're still in the office. Been here since 7. Just truly making sure that we're explaining things thoroughly to our clients, setting those proper expectations that they need to be, communicating with all parties, strategizing and getting their offers accepted, making sure that we stay committed to getting that mortgage commitment over to our clients in less than 72 hours. That is a promise we make to all of our partners. We have held strong. We are continuously working on holding strong to those amends and making sure our clients are getting the best representation in this competitive market and throughout their entire time frame when they're purchasing a home. I appreciate you guys jumping on as always. Hopefully we'll start seeing a little bit more insight. I will keep you guys updated as we continue getting this data, and we'll take it from there. Talk to you guys soon.